Hi everyone, on today's video we are going to speak about bull run and bear run scenario in certain types of stocks. Now what do I mean by that? So right now if you go in the market, you will see a bunch of overvalued stocks. You will see a bunch of undervalued stocks. Now, if there is a general bull run in the market, then of course majority of the stocks will do well and you will be happy that hey, you made the purchases. But what if the market stays sideways, or if there is a bear run scenario in the market, then some of the very high overvalued stocks are going to get crushed more. So on this video, I'm going to quickly cover 4 or 5 key stocks that have been very talked about, that what is going to happen in these stocks. And I'm going to present a bull run and a bear run scenario on these stocks. So let us kickstart our conversation, and also a very big thank you to our sponsors for today, which is Tickertape. It is an excellent tool for doing your fundamental analysis. You get a lot of commentary by a lot of analysts. They give their forecast or do scenario analysis on a bunch of different stocks. So you can go and check it out, and please use the link in the description box for availing a very special discount. So the first key stock that I'm going to speak about is the Adani Group Enterprises stock. So I'm not speaking about specific Adani stock. I'm just generally combining all the Adani stocks and presenting a bull and a bear run scenario in those stocks. So there are 4 key points that you need to remember about Adani stocks as of now. So the first key point is that Adani stocks have a very high debt. I will talk about it subsequently. What do I mean by this? Second, they currently enjoy a very high PE. Let me very quickly clarify. If you have been a regular viewer of this channel, you would already understand what high and low PE means. But if you are new to this concept, then high PE simply means that the market is giving a very high premium on these stocks. So for example, here you can see the Adani Enterprise chart, and you will observe that the stock is trading at 32.37. So what does this 32.37 means? That this price is fairly valued high as of now. Why? Because the PE of this stock is very high. What is meant by high PE? So it is assigning a higher premium, and it is saying that, you know what, Adani Enterprise is likely to grow very fast from this point. Therefore, it is okay for it to have a very high PE. So please notice the word that the market is forecasting a very high growth prospects in Adani Enterprise stocks. I hope this concept is clear. I'm explaining it at a conceptual level. If you like the explanation, do press the like button. It allows these type of videos to reach out to more people. So point number 1 is that the debt on Adani Group Enterprise companies is very, very high. And here's the chart for you, and you can see that the debt to equity ratio on Adani companies has been going up. So this is problem number 1. I will not speak too much about Adani debt. All of us know about that basic thing. Second key point, that the market is assigning a very high premium in the form of PE valuation for Adani stocks. This is not just for Adani Enterprises, but for all Adani stocks. Point number 3 is that almost all Adani Group businesses are infra heavy businesses. They are entering into some new spaces. For example, Adani Realty. So they are getting into real estate development. It's again a very high infra development business. Adani Ports, infra development business. Adani Transport Logistics, again somewhat infra oriented business. Now you name it, majority of the Adani Enterprise companies deal with infrastructure oriented projects. This is the third key point that you need to know about the business from a business valuation point of view. Now why am I stressing on this word infra? The reason is that a lot of infrastructure related business moves as per the interest rate environment. So take a look at this chart, and what you will notice is that in the entire world, not just in India, the interest rates are being increased. What is the significance of increasing interest rate on something like Adani Group? It is very simple, that hey, infrastructure heavy business, in order to fuel any type of its growth, what would it need? It would need debt. That is, it would need to take more loans going forward in the future as well. It's not as if the loans have been peaked out. In this new interest rate environment where the interest rates are going up, they are going to get a bad interest rate. Better than what you and I would be getting, but in general, they will be getting higher interest rate. So this becomes a slight problem for the business. So with these 4 quick points in mind, let us speak about the bull phase and the bear phase in the market. So in case there is a bull phase in the market, then is something like Adani going to benefit? Yes. Not only Adani's, almost every single business in India is going to benefit. And that is a good thing overall for the market and your and my investments. Now, will Adani's benefit a lot more? Now, it is very hard to estimate to what extent Adani's will benefit. But to cut the long story short, there are a few key positive developments that will happen in the stock. So the first key development would be that the government spending will increase. They are going to spend a lot of money on infrastructure development, and Adani ji is going to get a lot of projects, and definitely the firm will be able to make more money. The second healthy positive sign in a bull run that will happen with Adani stocks is that many of Adani Group companies are at a nascent stage. So the word of the day today is nascent. Let me know what does that mean. So many Adani Group companies are at a nascent stage, or they are entering into new businesses. A classic case in point would be Adani Realty. So it is not that big a business compared to other Adani Group businesses. And here is a chart for you. You can take a look at this, and what you will notice is that the realty business in India is coming up. Lot of new homes are being constructed at a massive pace. You can see the data all across different cities. So what does this mean? It simply means this real estate expansion is going to undertake, and very small Adani Group companies are going to become mid-size or even become huge. Who knows? So these infant companies, these nascent stage companies are going to benefit a lot in case of a bull run. Maybe Adani Enterprises will not become 2x, 3x in the next bull run, but these small companies like Adani Realty, they are going to become really big. Third key aspect would be that Adani does majority of its work by refinancing and playing around with the debt. So in a bull run scenario, the interest rates, they are going to get cut at certain stage, and that definitely benefits the financing of Adani companies. And these are some of the mega projects in which Adani Ji is involved. And if these projects get completed on time, he gets better financing for it in a bull market, then definitely these type of steps are going to help Adani Group companies. So this was the positive picture, but what about a bear run scenario or a sideways scenario? What is going to happen in such a circumstance for something like Adani Group? So there are three key points that I would like to talk about. So the first key point is that number one, there will be a PE contraction of Adani Group stocks. It simply means that the markets will now say that, you know what, we assigned a very high growth number for Adani Group enterprises. We assume that they are going to grow at 20% CAGR. But now there is a bear run in the market. It will hardly grow at 6-7%. See, Adani Group companies will still grow, but they are not growing as per the market expectation because of the high PE valuation. So if the forecast is cut by, let's say, hypothetically speaking, 20% to 10%, then that will lead to a very sharp fall in Adani Group stocks. So this is the first key problem that will definitely happen with Adani Group compared to any other group, that their PE contraction will take place and there will be a significant price drop in case there is a bear run or even a sideways market from here on. Second key challenge, that if there is a bear run, then many of the government projects generally will get stalled because government will need to make way for new financing for other projects, etc. So they might push a lot of these projects. So the projects will not get completed on time, and as a result, if new revenues are not coming, then this can lead to debt related issues. I'm not saying that Adani Group will go bankrupt, nothing like that. I'm not painting a negative picture, but what I'm simply saying is that, hey, repaying their debt will become problematic, and if the market even gets a whiff that some groups debt position is weakening, that can lead to a lot of crisis and hoo-halla in the market. Now third key problem is that even if we assume that, hey, in a bear run also Adani G's group will keep on expanding, they will figure out new businesses to enter, etc. My fundamental problem here is that, inherently speaking, infrastructure companies do not get the type of PE that Adani Group has gotten. Now you might say that, okay, there is maybe some kind of analyst misexpectation, etc. So what's the problem with Adani getting a very high PE? Okay, so let me give you a parallel example to which you can relate. So let's say Usain Bolt, who is the fastest runner in the world, he can run 100 meters in, let's say, 9.5 seconds. Now you say, and market starts betting on you, that Akshat is going to run 100 meters in 9 seconds. That's a very big claim, and I don't know if I can do it or not, but I hope you get the picture. The bet that markets have taken on Adani Enterprises, that's a slightly weird bet. That's all I will leave at. Just to set some context, here is the PE ratio of L&T and historic PE of L&T, and you will notice that this is one of the biggest infrastructure companies in India. It has traditionally enjoyed a PE of 25. Now you guess and type out what is the PE ratio of Adani Enterprises. Now the second stock I would like to quickly touch upon is HDFC Bank, or any type of major bank in India. You can replace it with Axis Bank, ICICI Bank. The analysis will remain somewhat similar. So let us very quickly touch upon some of the fundamental points around HDFC Bank and banking in general. And there are 2-3 key things that you must know. So the first key thing is that right now a narrative is being built that, you know what, Credit Suisse, which is one of the biggest Swiss banks and one of the biggest banks in the world, it is getting crushed. It is going to default. There are a lot of problems with Credit Suisse Bank, and this is going to become like a 2008 crisis. You might be reading the news that JP Morgan size was this much, Credit Suisse size is this much. It is such a big bank and it is going going to default. So as a result, other banks are also going to go under with Credit Suisse Bank. So if that happens, then something like HDFC Bank, ICICI Bank, Axis Bank will also take a hit, because the banks all across the globe are somewhat interconnected. But here is a key message that people miss out, that they do not look into the history and try to understand what was 2008 crisis about and what this 2022 Credit Suisse crisis is about. So I had done a 1-minute short on this topic, so you can go and check it out for further details, but let me give you a 30-second explanation on this. So basically in 2008 there was a financial system crisis, because there was something called as mortgage-backed securities that were being sold by all the investment banks. Now what are mortgage-backed securities? Mortgage-backed securities are basically paper assets that derive their value out of real estate. So for example, if you have a house, now if you can hypothetically convert that into paper and make it a tradable instrument, it becomes a mortgage-backed security. And all the major banks in the US were selling these mortgage-backed securities. Now unfortunately what happened was that a lot of loans or subprime loans were given to people who could not afford to repay the EMIs. So as a result, all these houses got crushed, and along with it, the derivative, which is the mortgage-backed securities, it also got crushed. And as a result, we had the 2008 financial crisis. In 2022 Credit Suisse crisis, what is happening? Credit Suisse is going through a lot of internal issues. You had their chairman CEO spying on the deputy, doing a bunch of weird things. The bank itself witnessing the problem of circular loan. They gave out a lot of money to organizations like SoftBank, which literally burned a lot of money by investing in bad startups. So all the stock price fall in Credit Suisse, it emanates from where? It emanates from internal issues. So this brings us to point number 2, that this is a scenario that also got witnessed in the Indian banking industry back in 2016-17. So you had Mr. Vijay Mallya crisis, you had Mr. Nirav Modi crisis. So these were internal banking sector issues in India, and therefore you would have seen that the NBFCs performed really badly in this zone. In fact, till today they have been unable to recover. A classic case in point would be Punjab National Bank. So you can go and check the stock price of Punjab National Bank, and what you would notice is in the recent fall from November of 2021 onwards, you tell me in the comment box how much has Punjab National Bank fallen, because after 2021 November there has been a crisis in the market that the banking stocks are not giving returns. But with Punjab National Bank there is nothing left to fall anymore. So anyways, coming to the topic, what I am trying to tell you is that the current Credit Suisse crisis, according to me, it is not going to trigger a fall in the entire global space. That's point 1. Point number 2, the Indian banking industry has already undergone a cleanup. Why? Because we have already witnessed a recent set of crises with PNB and bunch of other public sector banks, Vijay Mallya, Nirav Modi cases, ILNFS cases, etc, etc. So the bank cleanup has happened and the balance sheet looks strong. Now final point regarding banking is that it has become a highly regulated space. A classic case in point would be that if Paytm wants to launch a payments bank, RBI has to give a permission. RBI is super active and doing a lot of chehelkarmi if you want to build any type of fintech startup, etc, etc, and they have banned a bunch of startups. Who is going to benefit from all this? Traditional banks are going to benefit from all this. So now let us talk about 2 scenarios, which is a bull run scenario and bear run scenario. So let me speak about bull run scenario first. So the bull run scenario is that if the market breaks 18,400 and actually sustains that level, then are banks going to benefit? The answer is 99.99% yes, that they are going to benefit, and they are going to benefit immensely. There are multiple reasons for the same. That number 1 reason is that bankings have a high beta. High beta simply means that in a good market they give better returns than the market, and in a bad market they give a worse return than the market. So banking stocks are going to go up quite aggressively in a bull market. On top of that, if you check the valuations of the bank, for example, check the valuation of PNB where it is trading, check the 5-year returns of HDFC Bank where it is trading, they have hardly given any type of sensible returns in the last 5 years. On top of that, if you check their balance sheet, you will see that hey, highest ever revenues, highest ever profits, no problem per se. Then why is it that their stock price has not improving? So my hypothesis is that banks are going to become the biggest gainer in the next bull run in India. But what about a bear run scenario? So let me explain it by using this example of HDFC Bank. So you can see that back just before 2020, HDFC Bank was roughly trading at 1278 rupees, and right now it is roughly trading at 1450 rupees. So in case there is a 5-10% correction in the market, I do not see HDFC Bank falling below 1100 rupees. So that is my estimate. Of course, I can be a little bit off here and there, but the overall risk assessment on banks make a lot of sense. And this is the same scenario. You can go and test it out with a bunch of different banks. You will generally see that banks have underperformed the market over the last 5 years. The third stock that I would like to speak about is Maruti Suzuki Limited. Okay, so first things first, the stock has performed really badly in the last 5-6 years. For example, if you consider the last 5-year window, you will see that the stock has given just 11% return. One of the most prominent names in India, and it has performed really badly in the last 5 years. Total return becomes like 11%. So this is point one. Point two, why does this happen? So for this, you need to understand the nature of automobile industry. And in an automobile industry, there is something called as cycles. So cycle simply means that it takes a business like Maruti a lot of time to build its capacity to sell the final car in order to get the money. Why? Because it has to do a lot of R&D. It has to figure out its supplier distributors. It has to change its material building part. It has to then figure out distribution. So there is a lot of time lapse that happens when Maruti decides to produce a car to the point it can sell it. So therefore, the automobile sector is highly cyclical. For 5 years, it might not give any return. For the next 5 years, it might in total give like 100% return. So what you need to figure out is that, hey, are we in a downswing or an upswing when it comes to automobile stock? My hypothesis would be that, hey, currently we are in an upswing. Now, if the market becomes a bull market, of course, this upswing will become faster and something like Maruti will give good returns. So here is a chart, and what you will notice is that Maruti has undertaken a lot of fixed capacity improvement in the year 2019, 2020 and 2021. Now, this capacity has been built 3 years ago, and as a result, what has started to happen now is the sales, that it is generating some of the highest sales volume in years. Whenever new capacity is added in the automobile space, it will take little bit of time for that capacity to translate into results. And that is precisely what is happening with Maruti. So definitely, if there is a bull run, something like Maruti is definitely going to benefit out of it. On top of that, in a bull run circumstances, Maruti can also throw the gauntlet of entering into the EV space. Right now, as per my understanding, Maruti is not looking to enter aggressively into the EV space. They are running very small experiments here and there, but they are not full-fledged into the EV space, and neither they are looking to get into that space as of now. Probably in the next bull run cycle, they might make the announcement that, you know what, we are going to enter the EV space, and they are going to definitely benefit from that announcement because market is going to take this news positively. How do I know? Because that exact same thing happened with Tata Motors stock. But what about a bear scenario? What will happen to Maruti stocks in a bear scenario? So my assessment is that Maruti stock will not fall too aggressively in a bear scenario. Why? Because the automobile cycle is long. Even in a contracting economy, when people have not purchased vehicle for years, it's not as if that they will completely stop purchasing. So the sales of vehicles is going to go up. What is going to happen, however, is the operating profit margin. So from this chart, you can clearly see that the operating profit margin of Maruti is suffering, and in a bear run, it is going to suffer more. So yes, Maruti might be able to generate sales, but it will not be able to generate profits at the same throughput. So should you buy Maruti? Should you not buy Maruti? I will not give you the verdict. I will let you decide. I will give you a homework though. So here is the homework, that do the same analysis for another stock called as IRCTC. And let me give you 2-3 pieces of information. Number one, Adani ji is going to enter quite aggressively in the railway space. So please keep a watch out. Number two, the PE of IRCTC is still very high. Now go on Tickertape, look at different forecasts that analysts have predicted for IRCTC, and let me know in the comment box about the bull run scenario and bear run scenario for IRCTC. I hope you enjoyed this conversation, and I will see you soon the next time.